Everyone, apologies for the short delay. On behalf of BNK Securities, I welcome you all to 4Q FY19 post-session conference call of TVS Motor Company Limited. We are delighted to have with us today Mr. K. N. Radhakrishnan, Director and Chief Executive Officer, and Mr. K. Gopal Desikan, CFO. I will now transfer the call to Mr. K. N. Radhakrishnan for the opening remarks, to be followed by question and answer session. Over to you, sir.
Good evening, everyone. And once again, thanks to everyone for joining. This is K. N. R. With respect to Q4, if we look at our highlights of our performance, 18-19 we saw a challenging year in the auto industry. Insurance premium increased sometime in September, and consequent to on-road price increase of 6 to 11% in the total industry. Also, there was challenge in terms of reduced liquidity from NBFCs, extending retail finance to the customers, resulted in a much lower expected festival sales during the December quarter. This affected the industry in the last quarter, and the industry declined by 7.5%. Against this backdrop, TVS has done well, with a sales growth of 2% and a revenue growth of 9% for the quarter, from 4,017 crores to 4,388 crores. Export sales, we did well during this quarter. Industry growth was 3% and we have done 15% growth. Three-wheeler sales, we have grown 41%. Industry growth was about 11%. On EBITDA during this quarter, it is 308 crores compared to 295 crores of last year. A growth of 4%. EBITDA for the quarter is at 7%. Profit before tax for this quarter is 183.9 crores compared to 192 crores of last year. Profit after tax is 133.8 crores compared to 165 crores last year. Profit after tax for the corresponding year last year had a benefit of lower tax rate of 13.8, hence not comparable. Overall, when we look at year as a whole, I think 2018-19 was an excellent year, even though industry had some challenges. We have grown from 15,274 crores to 18,217 crores. Compared to the industry growth of 6.3, we have done 12% over in the last year. Motorcycles grew by 15%, scooters 15%, and moped grew by 2%. We gained market share from 14.6 to 15.4. Domestic two-wheelers, we have grown 9%. Industry growth was 5%. Exports, we grew 26% in two-wheelers. Industry growth was 17%. Three-wheelers, we grew 58%. So overall, if you look at 2018-19 as a year, our EBITDA is 1,433 crores compared to 1,175 crores, growth of 22%. Despite pressure consequent to the material cost increase and marketing cost incurred during the new product launches, our EBITDA for this year is higher at 7.9% compared to 7.7% of last year. PBT is at 961 crores compared to 878 crores during last year. Last year, PBT included notional fair valuation gain of almost 68.3 crores and a one-time GST discount of 16.5 crores. So the current year PBT 961 when compared with operating PBT of 826, after adjusting the above item, represents an increase of 16%. Profit after tax is 670 crores compared to 662 crores last year. The full year tax rate is higher at 30.3% compared to 24.6%. Last year, the lower tax rate was due to inclusion of tax-free fair valuation gain of 68.3 PBT and other benefit of certain completion of certain assessments like Himachal. Dividend for this year, we have declared first interim dividend during October board meeting, 2.1 rupee per share, 210%. March 2019, we declared the second interim dividend, 1.4 rupee per share. Put together, this year, the dividend declared is 350% compared to 330% last year. On new products and all our brands have done extremely well. All our brands migrated to SVT ABS ahead of the requirement timeline of 1st April. NTORQ 125 and Apache RTR 164 we launched during Q4 of last year have each crossed 1 lakh sales within 6 months of launch. Radeon, which was launched, has got a very good reception in the market, crossed 1 lakh sales within 7 months. Jupiter Grande, launched just before the season, was a great success. Our company won several awards during last year, including Scooter of the Year for NTORQ, Bike of the Year up to 125cc for Radeon, Bike of the Year up to 400cc for Apache RR310. 2019-20, we are expecting monsoon which is likely to be near normal. With improved economy, lower consumer price inflation, the disposable income with the customers likely to go up. Retail finance will be very critical as an enabler, and TVS credit services has done extremely well, and we are very strong. We understand the opening trade stock in the industry is still higher compared to the normal level. However, with improved economy, better liquidity, we will see better growth during festival season onwards. We have a very strong portfolio of mega brands like Apache, Star Range, Radeon, Jupiter, and Ntorq. We will continue to grow ahead of the industry both in domestic and international markets. Thank you. Hello? Hello?
Yeah, we'll go for Q&A, sir.
Yeah.
All right, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder, you may press star and 1 to ask a question. The first question is from the line of Kapil Singh from Nomura Securities. Please go ahead.
Hi, sir. First of all, I wanted to check what are you picking up on demand, any growth outlook that you would like to share for the two-wheeler industry, and also where are the inventory levels for TVS?
With respect to industry, I think still the stock levels are higher as for the industry. We are always operating around 5 weeks of stock and 4 to 5 weeks depending upon the time. As of now, we have close to 5 weeks, and this year we are likely to have, this is based on the forward sales, and we are looking at, now the marriage season is going on. We are growing better than the industry during the marriage season, and we are expecting industry to do well from the festival season. Then last quarter will be most likely to be BS6 changeover for most of the players. So second quarter you will see good growth. First quarter, depending upon each player, whatever the inventory levels are, we will have to see how the industry is likely to pan out. Third quarter again will be a good quarter, and fourth quarter we will have to see how the BS6 changeover each of the player is planning. Overall, we are expecting the industry to have a growth, maybe a marginal growth for the industry, and with the brand what we have, we will grow faster than the industry.
Okay, sir, that helps. Secondly, on the results for the quarter, the gross margins for the quarter have seen a drop on a QOQ basis. What exactly is the reason for that? And also we noticed that staff costs are down YOY for the quarter. So if you could explain both of these.
I think overall, if you look at it, if you look at quarter on quarter, the material cost continues to go up. And if you look at between last quarter to this quarter, while we have increased prices, we have also overall between Q3 and Q4, there is a small increase in the fixed cost. And the scooter industry coming down, there is some challenges on the product mix as well. So overall, that is one of the key reasons for the EBITDA to come down marginally. But this year we are expecting the material cost to stabilize, and the scooters are coming back, and that will also help us. On the people cost, there has been overall fixed cost itself, we have started focusing last year. If the industry had held during last quarter, we would have had very good savings. However, overall we are able to save about 0.2% in fixed cost.
Okay, sir. The question was also in context of we are seeing some cost increases, right? ABS and then upcoming BS6 as well. So are you seeing these costs being fully passed on?
See, we changed over
on ABS.
Yeah, we changed over sometime in February to SBT and ABS, and this has been fully passed on. That is also there in Q4, and marginal price increases we have taken up that time. And with respect to ABS, this is fully passed on to the market.
Thank you, sir. I'll come back in the queue.
Yeah.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. A request to all the participants, please restrict 2 questions per participant. The next question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Thanks a lot for the opportunity, sir. And just sticking with the question Kapil was asking on the RM side, just wanted to probe as in your RM costs have gone up even sequentially. We believe that there could be some year-end benefits on the vendor sourcing side and also the localization benefit on the imported component side, and also some bit of moderation in the hard commodity prices. So if you can just throw how that has played out, because if you look on a YY basis, you're losing close to over 250 bps just on the RM sales to revenue ratio alone. Rest of the cost lines have done well. So if you can just throw how much of this you can kind of recoup over a period of time, and how do you see FY20 as a whole on the gross margin side?
The post restatement of the freight costs in line with the Ind AS related requirement, the material costs have gone up. That's one of the reasons. For example, the 73.5% was 2007-8, but it has been raised as 75.2% if the Ind AS is applied there. Therefore, the comparable number is not 73.5 versus 76.6. It is 75.2% versus 76.6. It's only 1.4% increase.
And the import localization bit and on the sourcing side, on the commodity side, so how is that playing out?
The import we have brought down last year was around 14%. Now we have brought it down to almost 12%. Okay, we could have got a little bit extra benefit if the industry volumes were better in the last quarter. But because the industry went into negative, the consumption of that was a little lower. But we are planning to take it to 10% next year.
And the commodity prices, have they corrected at all for you, or you haven't seen the commodity price correct at all? And how do you look at it at FY20?
I think commodity prices in terms of last Q4 also was going up. This year we are looking at a stable situation in commodity price.
And second question is on the TVS finance side, sir. If you can throw some color on the full year performance, how that business is done, and how do you see it shaping up in FY20 and going into BS6, and any plans of monetization there?
The book size as of 31st March 2019 stands at 8,335 crores as against last year's 6,154 crores. And the components of that business is two-wheeler constitutes 46%, used car 24%, tractor 17%, and others at 13%. The PBT for the year is 216 crores compared to 207 crores of 17-18. And PAT is at 148 crores against 138 crores. And TVS Credit caters to 49% of the retail finance of TVS Motor Company. And Ind AS is applicable for the current financial year. The net NPA is lower than 2% today, and the capital adequacy is around 18%, and the ALM is in line with the RBI norms. And the cost of borrowings, which has slightly gone up in the last year because of the liquidity issue, though the availability was not an issue, but the costs have gone up a bit. But that will come down during the year 2020, with RBI also easing the norms for making NBFC to access ECB loans. The cost of funds will come down, and effectively that will also help TVS Credit Services to grow. As far as capital adequacy is concerned, not an issue, and therefore TVS Credit Services will fully support the TVS Motor Company related retail finance requirements.
So what are the costs of borrowing?
The cost of borrowing last year was around 9%, 9.1%, but this will come down significantly in the current financial year.
Thanks a lot, sir. I'll come back in the queue. Thank you.
Thank you very much. The next question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi, sir. Thanks for the opportunity. Just continuing on TVS Credit Services, what percentage of your bikes are financed now? Like you said, half are financed by TVS Credit. But what is the total?
49% of our bikes are financed.
And within that 49%, half of that is financed by TVS Credit.
Yeah, correct.
And just secondly, on the ABS side, you've taken price hikes post ABS. Like when you look at the April sales, could you share with us, A, what percentage of the Apache, for example, that you sold in April were actually with ABS? And point B, have you seen any slowdown in demand post this hike?
See, we have started supplying practically ABS vehicles from February. April, majority of the sales will be ABS, barring few dealership stocks, whatever they had, January, February, March, non-ABS stocks. We have passed on the cost increases. So too early, according to me, because when you have ABS fully operational in the market, maybe 1 or 2 quarters it will take to really appreciate what is happening to the overall changeover and the demand pattern. As of now, demand is holding on.
Right. And so secondly, like a lot of companies have been talking about early switch towards BS6. So which is like when will TVS start to ramp up on that, and any indications on the cost impact of that?
See, as of now, like I said, we are all proving the technology, but changeover definitely April 1st, 2020. This is the registration date. So we will be much ahead of the plan, and we will make sure that the transition happens much ahead of that. And with respect to cost, I think once the technology is proven and the product are in the testing stage and completed, I think we'll be able to possibly comment on what are the cost increases.
Right. And just one follow on, like we talked a lot about the electric scooter. When do we sort of see that?
We have invested in electric technology, and this financial year we are planning. Closer to the launch, I'll be able to give you more details.
Great. Thanks a lot. Thanks for the opportunity.
Thank you. The next question is from the line of Shyam Kumar from Sundaram Mutual Fund. Please go ahead.
With regard to exports, what's your outlook?
Sorry to interrupt you, Mr. Kumar. Can you
make it a little louder, please? Can you repeat the question, please?
With regard to exports, given the commodities have moved and crude has also moved, what's your outlook, sir, now on exports?
I think exports will continue to do well. We have done well last year. The industry, we have seen overall, we grew by almost 26% and industry grew by 17%. We are expecting this year also exports will grow. I think the stability of crude prices are there. Currency availability is also better in many markets, and the currency depreciation is also lesser. So given the stability, given the kind of availability of overall, I think it is likely to do better in the international market. Industry will grow, and we will continue to grow ahead of the industry with the kind of product range what we have. The excellent portfolio, I think we will do much better than the industry growth.
Thank you, sir.
Mr. Kumar, do you have any follow-up question?
No, thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Securities Limited. Please go ahead.
Hi, sir. My question pertains to the price increase.
Mr. Gandhi, sorry to interrupt you. Can you please speak a bit louder?
Yeah, is it better now?
Yeah, go ahead.
Yeah, so my question pertains to the price increases taken by us in fourth quarter and in April.
Fourth quarter, we took up prices. Just give me a minute. Q4 we took up about 0.4%, around 0.4%. And of course, when SBT and ABS products were launched, we also increased prices. In SBT, between products about from 300 rupees about increase, and Apache brand, when we came up with ABS, 6,000 to 6,500.
Sorry, 6,000 to 6,500, is it?
Yeah. This is for ABS in Apache.
Right. Secondly, what would be the breakup of revenues for spares and exports for the quarter and the full year?
Yeah, spares and
exports.
Total is about 1,100 crores.
Exports.
Q4.
Okay.
300 crores, 4,323 crores.
Okay.
And 24% of the total sale.
Right.
Last year we were around 21%.
Right. And spares?
Spare parts. Just give me a minute.
Sure. Maybe the interim can share what kind of capex we intend to do in FY20 and in what areas? Hello?
One second. Just give me a minute. I'm looking at spare parts. It's about 462 crores.
For the
Q4. 400 crores, sorry. 404 crores for the quarter.
And for the full year?
Year as a whole is about 1,573 crores.
So exports have been growing, spares also has been growing healthy for us.
Yeah.
Right. And what kind of capex we plan to do in FY20?
This year we are looking at around 650 crores.
And this would be just for BS6 or there'll be
all. BS6 plus all new products, everything, technology.
But no new capacities in this.
So capacity, there may be some capacity for some of the new products. So all are included in this.
Okay. And investments would be similar, 200 to 50 crore for the full year?
Which one?
Investments in subsidiaries and associates?
Yeah, you're right. It will be around that range.
Okay. And so lastly, with respect to BMW alliance, so with first product being launched now, any sense on when do we expect to launch second product that way, and any feedback from BMW on the first product?
Excellent feedback. I think both the products are doing extremely well. The market acceptance of these products are very good. RR310 for us is also doing well. We are coming up with another model closer to launch. I'll let you know what exactly is the model.
Understood. Okay, great. So thanks and all the best.
Thank you.
Thank you very much. The next question is from the line of Amin Priani from Deutsche Bank. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, the first question is just a clarification. You mentioned that for the industry, the growth will be marginal for the fiscal year. Is that correct?
Industry, see, there is challenge because of whatever I'm able to understand.
Yeah.
Because of the extra whatever stocks we have seen in the industry.
Yeah.
So there is some challenge compared to the normal levels in the first quarter.
Yeah.
However, we see along with the festival, you will see a good growth for the industry.
Yeah.
And in Q4, the transition to BS6 will happen.
Yeah.
So, given these changes, I think we will see a moderate change in the industry.
Yeah.
Industry has also requested, we are all the companies have requested for this category of two-wheelers, we are also strongly requesting for reducing the GST from 28 to 18%.
Okay.
Because if you look at the highest rate of 28% is reserved for luxury and goods, and two-wheeler is used by the common man, and definitely it deserves a lower GST rate.
Yeah.
So we hope the government will accept this request for the industry, and two-wheeler industry very, very important and vital for the auto sector in India. So we are hoping that will happen by the time, and then we will see post-season a good growth in the industry.
Great. Okay. Thank you. And so, secondly, on the financing side, incrementally over the last 1 month or, recently, have you seen any pressure in terms of financing, not just, in terms of delinquencies for the other lenders or, need to increase down payment? Because we are hearing from some quarters that on the ground, at least on the rural side, there seems to be some stress on the financing side.
No, we don't see such trend now. Our delinquency is under control. Availability of money is not an issue. Liquidity is improving, and the costs are expected to come down.
Okay. And even
Eventually, also the retail finance penetration has gone up. Q1 it was around 39%. And Q2 it went to 43%, and at Q4 we are at 51%.
Okay.
So sequentially also it's growing.
Okay. And so lastly, just on one line item, interest cost this year has, gone up significantly. So how should we look at it, next year from a net debt and cash flow point of view? Because this cost has increased materially this year, actually.
No, one is the borrowings have gone up, consequently increase in capex last year and investment in other investments made. And we continue to focus on generating free cash flow, which will help the company to sustainably reduce the borrowings in the next few years.
Okay. Thanks, sir.
Thank you very much. The next question is from the line of Chirag Jain from SBI Cap Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, you mentioned that scooter industry might come back this financial year. So what are the factors that you are monitoring which gives you the confidence that we could see a reversal this year in case of scooters?
I see last year scooter industry went down primarily because of one, the urban areas were slow. We saw that very clearly. Number two, definitely when you have significant price reduction in the commuter category, there is also a little bit of pressure on the scooter category. Okay, these two put together, we saw a significant decline. But if you look at on a last 4-5 year basis, scooter industry has done extremely well and it has come to almost 32-33% category share. And scooter has got the inherent positive this one for urban market. It is multi-use. It is very aspirational. It has got good convenience for anybody to use in the market. So there are a lot of positives in scooter. So now with urban demand likely to pick up this year, we are confident that scooterization and scooter category share will start coming back.
Thanks for the explanation. Second thing, how are we seeing the incentives or discounting per se in the industry? You mentioned that obviously there's still some stress with respect to very high channel inventory. And just similar to that, I mean, how do we see our own margins panning out? I mean, you indicated that this year could be relatively a low growth sort of a scenario for the industry. And again, next year we could see a challenge because of BS6 related cost hike. So for the next 2 years, by and large, we could see a fairly muted growth for the industry. So in that context, how do we see our aspiration for double-digit margin guidance?
See, we consciously did not want to take part in the discount war in the commuter segment because that will affect the long-term brand value. And if you look at the low-end commuter segment, it is less than, it's around 15 to 16% of our total domestic sales. And we will definitely continue to deliver superior value to our customers through better products and superior technology. That is also seen in our customer satisfaction feedback from the market. So even last year, we have grown 9% compared to the industry growth of 5%. So whenever the industry is likely to grow better, we are likely to see much better growth for us. And that will definitely help us. And please understand, whatever the marketing investments, whatever we have made in Q4, if the industry growth has supported, our EBITDA would have been much better. So sometimes, we have to participate in the industry. We have to wait for the opportunity to come. And I'm very confident that this negative growth, whatever we have seen, sometimes these things happen. And overall, if you look at a CAGR on a longer term perspective, two-wheelers will grow. The mobility needs in India is very high. Okay, while we may have 2-3 quarters where we may have some challenging times, it will grow. And when it grows, our Apache brand or Jupiter brand or Ntorq or Radeon, they are definitely going to support us in terms of better profitability.
Any specific number you would like to share with respect to margins as a guidance?
I don't want to give any guidance on margins, but we are focusing on significant cost reduction, both in material side. We are looking at alternate sourcing. We are looking at VAVE. So we want to definitely improve our margins. That is our intent. Okay. We will continue to invest in new products and we will invest behind the technology, whatever is required. And definitely we are seeing that when the industry starts picking up, we will see a good improvement in our margins.
Okay, that's it from my side. Thank you so much.
Thank you. The next question is from the line of Vasudev Banerjee from Ambit Capital. Please go ahead.
Yeah, thanks, sir. A few questions. One, In the previous call, you said that you expect urban demand to pick up this year. So, any drivers you see this year which should be the lead to the revival of urban demand of two-wheelers per se?
I think overall, the availability of, the liquidity crunch, whatever we have felt last year around September, is a bit eased out. I think insurance, slowly the customers have taken into consideration now. And the economy, according to me, should start improving. And we are expecting a normal monsoon. So that's why I said, Q2, Q3, along with the festival season, you should see a good, at least a healthy single-digit growth for the industry. And if our request as an industry, the 28% GST comes down to 18%, which is the right kind of GST for this category, I think we will be back on track in two-wheeler industry.
Sure. In the call, where you said that because of the freight cost adjustment, one should look at 140 bips adjustment. So even if I adjust that, that means 75.2% RM to sales, which is like a multi-year high level. So going ahead on this base of raw mat to sales, how should one look ahead? For example, as you said, ABS price increase was 6,000 to 6,500. Did that include your normative 8% margin in that, or it is just cost pass on, which indirectly can have an impact on your gross margin?
See, I don't want to give you how much is the margin we pass on in product-wise. But ABS is a very aspirational, in Apache kind of a brand. Customers love it. I'm pretty confident that, of course, 6,500 rupees is a huge increase, but ABS adds that value to the customer. So definitely, while he will recognize that overall a period of, and this is also for safety, whether it is SBT or ABS, it is for improved safety, and we are all responsible companies. So I'm very confident that that will only add value to the customer. And overall material cost, it has been growing in the last 6 quarters. Definitely, we will see some softening or stability this year.
So already you have visibility of softer commodity prices, which should take reversion of this gross margin sooner than later, or you expect these kind of levels to sustain for a few more quarters?
Actually, the material cost is likely to be stable because already it has increased to a very high level. And we are taking many initiatives with respect to the cost reduction and fixed cost reduction. If we start getting a positive industry growth, that will definitely help us in improving our EBITDA.
Sir, your staff cost seems like lowest in last 2 years. So you said some 20 bips reduction in staff cost, that is fine, but how much this is sustainable, like 240 crore or normative levels down to 200 crores. So can we see that going back to 240 crores from next quarter onwards, or you see this as a sustainable number?
I think year after year we have improved on our employee cost, and that will continue because we are not adding extra people. With the current people, even if the industry had grown better, we could have done better. We are only focusing on the new technology side, investment behind people, where we are adding some new domain technologies, electric. Those areas we may have to add a little bit of people. But overall, otherwise, in the current business, we don't have to add people. So with the current people, if we are able to grow our business better and the industry supports us, definitely you will see the same trend to continue.
So you mean there was no one-off in the staff cost, like some write back or provision, anything like that?
I said for the year, okay? Because
for the quarter?
We don't look at quarter to quarter that way. We look at for the year overall how the fixed cost focus is continuing, and that will continue.
Sure. Okay, sir. Thanks.
Thank you. The next question is from the line of Raunak Sarda from Systematics Group. Please go ahead.
Opportunity. The first question is on the inventory side. You highlighted it's around 5 weeks, which is significantly less than what the dealer association and news reports have been quoting for the industry. Is there any specific product or segment where our inventory is built up, or is it a normal level across all the 3 segments?
It varies from area to area. I look at from overall where are we today, and every month when we look at our retail to what we dispatch, we very make sure that we don't add. There may be some areas and some models, some plus minus will be there. That we regularly review on a monthly basis and we keep correcting it. But on an average, 5 weeks is what we always look at.
So for FY19, assuming inventory was 5 weeks at the beginning of the year, our retail growth is mirroring the wholesale dispatches for FY19. Is that a correct assumption then?
I think we have done better than the industry.
Okay. And the second question was on your mopeds. How do you see the BS transition for mopeds specifically? Is there some specific marketing strategy for mopeds this year?
The moped will continue. Excuse me. Moped will continue to meet regulations. Okay. Already, moped we moved from 2-stroke to 4-stroke. Now we have electric start moped, and we have unique attractive qualities which can cater to the bottom of the pyramid, and it will completely comply for BS6.
Sure, sir. But sir, given the cost increase might be detrimental for the kind of customers we target, are we pushing this product differently this year?
I think cost increase is for the industry. It is not only for moped. When BS6 happens, across the board there will be cost increase. It is what we need to look at the relative kind of a positioning in the industry. And like I said, we have to look at 28% GST. I think it's a fair request from Two-Wheeler Association. That 28% bringing down to 18%, it will be good for the industry. Coupled with, I think the TVS Credit Services, the retail finance arm, not only TVS Credit Services, other companies, retail finance companies are also fully supporting us. I think retail finance will also support this set of customers. So overall, while there is a relatively high pressure in terms of overall cost in the BS6 across all categories,
right.
Moped will definitely will be complying with the BS6 technologies, and the support of retail finance and GST reduction and other initiatives from the company, we are very confident that it will do well.
Sure, sir. And sir, last question, a follow-up again on your gross margin contraction on a quarter-on-quarter basis. If I see the product mix, it's mainly scooters which have gone down sharply on a QOQ basis, while your exports, mopeds have all increased. Is it mainly that scooters impacting the gross margin mix? Because assuming quarter-on-quarter commodity costs have not gone up very sharply.
I think it's a combination of whatever I said in terms of the material cost increase, whether it's Q4 to Q4 or Q3 to Q4, and also the scale benefit. We could have got much better scale benefit, and definitely scooter Q4 to Q4 is also low, Q3 to Q4 also low. So all this put together, we have seen this reduction in terms of the EBITDA margin for this quarter. But you look at the year as a whole.
Yeah.
When you look at year as a whole, we have done much better, 7.7 to 7.9. Right. When the industry is facing huge pressure on the EBITDA margin.
Sure.
We have gained market share. We have done well with respect to EBITDA margin growth. So overall, whatever strategy we have put with respect to the range, with respect to product, also with respect to the kind of industry degrowth what we have seen, the kind of on-road price increases whatever we've seen post-September, given all that, I think we have done much better than the industry. And EBITDA also has done well.
Sure, sir. Thank you and all the best.
Thank you very much. The next question is from the line of Raghunandan from Emkay Global Financial Service. Please go ahead.
Thank you, sir, for the opportunity. So on the two-wheeler side, we have gained market share, but specifically looking at entry-level motorcycle, there has been some pressure due to increasing competition. So anything that you can share on the strategy there, and also the new products expected this year, sir?
The entry level, we have started growing faster than the industry with Radeon there. There have been challenges with respect to certain discounting there, but with the help of we have the Star range and we have now Radeon. I think we are confident that the better acceptance in the market of Radeon and the retail finance, we will do well in the commuter category this year. But we have gained marginal gain in market share even in this category.
And sir, anything you can share on the new products?
New products is a must. success of TVS has been whichever brand we have been there, we have always delighted the customer with new products. I think closer to launch, I'll definitely share with you for 2019-20.
Thank you, sir.
Thank you. The next question is from the line of Gunchan Prithyani from JP Morgan Chase. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. Your working capital seems to have moved up. Looking at the debtor days, it has moved up meaningfully. From what we understand last time also you had mentioned you didn't have much channel inventory. Can you just explain why has the working capital moved up so meaningfully within a quarter?
I think there are two challenges. One, while we are keeping the inventory, we have also produced little extra because all of us expected the Q3 season to be very good. So we have to manage a little bit extra stock in the plants and all our warehouses, and that put some pressure on the working capital. But now, month after month, it is coming down, and we are pretty confident that 2019-20 it will definitely ease up. The free cash flow will improve. Okay.
Okay, and is there? This is because if I look at the breakup, inventory with you hasn't moved up much. It's more to do with the receivable days. So, is there anything to read with the inventory that's with the dealers that's higher than normal, or you've extended longer credit?
There were challenges which dealers have been going through, even though the inventory levels are not high. But there were some challenges in terms of receivables there, but that is also easing out.
Okay.
This we have seen because when industry goes into negative in the last quarter, that way, especially from December, January, February, March, there are some challenges for dealers as well, even though they were keeping the inventory. Because when you look at the forward sales is the basis way we look at. When the retail slows down and the industry has got a huge decline, we find that a little bit pressure is there. Now is it easing out as the industry is likely to do better? But we keep the stocks every month and we look at it, what is our primary sales, secondary sales, and we look at it and very closely and we do that.
So, sir, for this quarter, domestic market, we had a marginal growth, a marginal degrowth. On the retail side, would the number be very significantly different? If you can give any sense on how the retail growth would have panned for the quarter.
Normally, see, we don't add higher stocks, but we always look at certain numbers on the retails and then we plan what is the dispatch. Okay, so we are cognizant of that, what we should do, and we keep correcting every month, and during the quarter, definitely we will correct it.
Okay. And second question I had on the margin front. Now, of course, we've delivered slight margin improvement this year, but we really had a good year in terms of volume growth, in terms of market share gains. Now, looking at next year, your guidance itself suggests that you're looking at very marginal growth for the industry for full year. There is going to be fairly high competitive pressure for inventory correction, even in second half ahead of BS6. Is it fair to assume that the margin improvement gets deferred more because next year is likely to be even more challenging than what we saw this year?
I never said next year there won't be growth. I said it will be put into three buckets. If you look at the initial first quarter, there are some challenges because of the inventory. But second quarter, Q2 and Q3, I said definitely industry will grow along the season. If our request is heard in terms of the 28% coming down to 18%, industry will be back. This is exactly what I said along with the BS6. So you will see. Because there has to be, because this year insurance increase was a huge increase, whatever we have faced. So we are looking at, for this category, the GST is around 18%. That is the request we have made and we are hopeful that it will be honored. So once you see that in the second half, with the normal monsoon, industry will definitely do Q2, Q3 very well. And Q4, most of the companies will change over to BS6. At that time, around that time or a little before that time, we see a change in the 28 to 18. You will see definitely industry will come back to the normal level. And retail finance, I think is going to be a huge enabler, and TVS is doing extremely well. So we will definitely grow better than the industry, and I am hoping good single-digit growth in the industry. It can go much better if the 28% comes to 18%.
Okay, and last, just one more question on the...
And international, please understand our international proportion has been going up. Last year to this year, 21% has become 24%. International, we have been doing extremely well and healthy double-digit growth. And this year also, we will grow much faster than the industry.
Yeah,
so overall, as a company, we will definitely grow much ahead in the revenue. And that will definitely support with the initiatives on the cost, our healthy margins.
Okay, and this export is not dilutive to margin in terms of mix, right?
Overall, we are growing. Overall export growth, revenue growth, for the same cost, it will definitely help us improve our margin.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Sonal Gupta from UBS Securities. Please go ahead.
Hi, good afternoon, sir. Thanks for taking my question. Just a couple of things. So on the financing side, I mean, could you tell us full year how much the financing ratio moved versus last year or this year?
I think the book size has grown up from 6,152 crores.
So for TVS automotive sales, what percentage of sales were on financing last year and this year? Not from TVS credit, but overall.
The retail finance penetration has gone up from 38 to 44%.
Okay. And just on the, so are we seeing any pressure on the rural side in terms of financing? Because I think somebody has already asked this, but just wanted to understand is there...
No. We don't see any issue there. We are growing, except the fact that in the month of December to February, there was an issue with regard to the availability of finance for others. But however, for TVS Credit Services, there was never an issue. Even the retail finance penetration has gone up consistently throughout the year. As I said earlier, Q1 was 39%. Q2, it has gone up to 43%, Q3 be another 4% at 47%, and at Q4 51%. So consistently, sequentially, the penetration is going up.
Okay, sir. And just on the export side, I mean, you've done very well on the export side. So could you tell us which markets or geographies exactly are driving the growth?
See, if you look at last year, we have seen a good growth in Africa. We have seen good growth in Asian markets. We have seen stable currency and better availability of dollars. So overall, most of the markets have started doing well last year.
And would you be able to give a broad mix of what percentage of sales comes from Africa and Asia?
Equal. It's almost 30. Asia is about 33%. Africa is about 50%. And other markets correspond. These are all for two-wheelers.
Yes. Okay. This is for two-wheelers. Okay, sir. Great. Thank you so much.
Can we have one more question and close?
Sure, sir. Due to time constraint, this will be the last question for the day.
So we can take another 2-3 more questions because we started late. Sorry for that. So maybe we will try to close it around 5:35, 5:40. Okay.
The next question is from the line of Bharat Janani from Sharekhan. Please go ahead.
So thank you very much for the opportunity. Just to follow up on the previous question asked about the moped transmission from BS4 to BS6. So if we understand the cost increase for the moped...
Can you please a little bit louder? You're not clear.
Yeah. So is it better now?
Yeah.
Yeah. So, sir, this is on the transmission for the moped from BS4 to BS6. So, the cost increase is expected to be very steep if we compare to the other two-wheelers, given the smaller size, ticket size of a moped. So, how do you see the impact of that on the moped volumes? Because since you are the only player in the moped segment, so if you can just elaborate and throw some light, what kind of volume is is expected post that transition from BS4 to BS6?
See, if you look at this year also, when the insurance has gone up, moped sales have grown from 8.8 lakhs to 9 lakhs. Okay, almost a positive growth of 2.3%. So while moped customers have got bigger challenge, but this product has got a very clear attractive quality for the bottom of the pyramid. And here, please understand, we have also given the electric start, which is most convenient for this set of customers. And today, 90% of this category is electric start. Okay, so we have to constantly work with the customers and look at how to add value to them. This is number one. Number two, BS6 as a technology, definitely we are working and we are confident that it will work on moped as well. We have to closely study what is the cost increase, what is the price increase in this category, and we will have to come up with our strategy, how to support this set of customers, because customers are there. And we are confident that we should be able to get over it.
Okay, so thanks.
Thank you. The next question is from the line of Abhishek Jain from Dollar Capital Market Private Limited. Please go ahead.
Thanks for taking my question. Just I wanted to check the rural versus urban mix in total volumes, and I just wanted to understand that how much dealership have you added in last 1 year?
See, rural urban, normally we have seen for the industry around equal percentage, 50-50, that kind of a percentage. Okay, and please understand the definition of rural itself. It becomes semi-urban and it keeps improving year after year. Now, coming back to network addition, last year to this year we have added about 150 main dealers.
Okay.
And if you look at sub-dealers, we have added another 150.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Jay Mehta from Edelweiss Financial Service. Please go ahead.
Yeah, so this is Chirag here from Edelweiss. Thanks for the opportunity. Sir, first question is on scooters and motorcycles.
Sorry to interrupt you. Can you please speak a bit louder?
Yeah, I'm audible now. Sorry.
Yeah, now audible.
So just a question that while at gross margin levels, it seems from your commentary, scooters has a slightly higher gross margins. I presume at EBITDA level, whether it's scooter or motorcycles, the profitability would largely be similar. It's more about the product mix and which is affecting your gross margins. Is it the right way of looking at it?
No, I never said that scooter has got better margin or motorcycle has got a better margin. The decline in scooter, because of the industry, while we have gained actually 1.5% market share in scooter, decline has been sharp. Sometimes you look at the kind of decline and Q4 to Q4 or Q3 to Q4, what happens is your marketing expenses remain same. So overall, when we look at it, you can't withdraw the marketing support, whether it is brand building or many other initiatives we take. So we have to look at overall, what is the kind of volume we expect and what happens, and how is it changing from Q3 to Q3, Q3 to Q4, or Q4 last year Q4 to this year Q4. So I said the product mix in scooter, especially because of the low industry growth, and nobody can predict a negative growth the way we have seen the last quarter. That has affected is what I said.
I was referring to gross margins primarily.
No, I said I never gave a guidance that scooter makes better margin. I said industry came down, scooters came down. Because of that, while we have gained market share in scooter, significantly we saw between Q4 to Q4 and Q3 to Q4 significant volume reduction in the scooter. Okay, and we have continued to put our marketing effort even in Q3 and Q4 this year and significantly. But the returns are less. But that doesn't mean that it is not going to support in Q1, Q2 of this year.
The second question, a clarification actually, at that point on this commodity benefits. So, do we expect in Q1, Q2 commodity benefits, commodity cost benefits to be there in P&L? Because till last quarter, the industry was indicating that the commodity, the material price decline is likely to have some benefit going ahead.
See, we all hoped that Q4 we will see some softness. So far, we have not seen softness. Okay, and crude also went up. If you look at in Q4, we thought it was going to be stable, but it suddenly went up. So we all saw some things which are not supporting the industry. Ideally, when the industry comes down, there is a serious decline in the industry. The material cost should support us. That has not happened. So given the kind of changes, and we'll have to look at this year, the prices may be stable. Crude is still high. Okay, I think it's around $70, 70, 75. So we'll have to see. But if you look at last year to this financial year, we are hoping that the material cost should be stable.
And sir, just on spare parts, if you have to look at next 2-3 years, what is the kind of reasonable growth to look at in spare parts, and what is driving the strong spare parts growth?
I think we will continue almost similar momentum in spare parts because we have the responsibility for servicing the genuine parts to all of our customers, and spare parts is very, very critical, and customers also want genuine spare parts. So we will focus on spare parts the way we are focusing as of now.
And growth is equal, is similar in exports and domestic, or is more skewed to a particular geography?
No, it's similar. But exports, as we put the products into the market, we have to have the distribution system. But we always believe in putting the 3 years even in the international market. So spare part, it will also do well in the international market.
Thank you very much.
Thank you. And we have the last question, please.
Sure, thank you. Ladies and gentlemen, due to time constraint, this will be the last question for today from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Oh, thanks a lot for the opportunity again, sir. Just a couple of questions on Indonesia. So, if you can just update us with the performance of Indonesia this quarter, and also on the Sundaram Auto component, and whether both combined, what was the kind of profitability what you had, or the losses what you had?
See, on Indonesia, our EBITDA losses have come down to 3 million this year from last year's 3.7 million. So if you look at it, from last year 6.4, 2016-17, it came down to 3.7. Now they've come to 3. The export sales have been very good. We have started our 3-wheeler sales from Indonesia, and next year we are expecting much better growth, and we are planning to have break even in the financial year 19-20.
As far as Sundaram Auto Components is concerned, it is a 100% subsidiary of TVS Motor Company. And the sales of last year was 595 crores as against the previous year's 575 crores. And the operating PBT is in line with last year, around 24 crores. The net worth is 350 crores. And this is growing, and the dependency on TVS Motor is less. They are also supplying to other manufacturers, and is growing.
Yeah, this again, sir, just checking with the other subsidiaries, how's the Emerald Haven real estate business done, sir, and what are the plans on monetizing that particular asset?
Emerald Haven Realty is, they have done very well last year. With a change in the accounting, Ind AS related, where the income recognition is based on the delivery of the products and the completion of the obligations. Therefore, the profit for last year was around 8 crores when compared to the previous year's 5 crores. The area under development for them is also around close to 5 million square foot today. Their net worth is 450 crores, 452 crores.
So, will it need further investments from your side?
No.
So, won't need any further investment, and the net worth is around 450 crores. As in, when you monetize it, you should get a commensurate value unlocking, right?
Yeah, the next financial year, there is no plan for any future investments.
And so, now that I'm the last guy to ask a question, as in, if you can let me ask one question on moped, because the general concern is that the percentage price increase will be very dramatic for moped given the pricing, though it has kind of moved closer to some of the economy segment motorcycle or even higher with electric start. But as a customer who purchases in that category, do you see them looking at the price differential between a moped and economy segment motorcycle? Do they cross shop between the two categories often, or is it a very sticky customer base what you have in the moped category? And B, whether they look at the absolute price differential between the economy segment motorcycle and a moped, and that's need to be maintained rather than looking at the percentage increase per se. So how does the customer in that category operate, sir?
The moped customer is a simple customer. They don't have so much of complication in their mind. See, they look at for utility purposes, and they want that convenient features. Electric start, that is one of the reasons in electric start when we gave, 90% of the customers have moved to electric start. So they look at what convenience. And with the kind of TVS CS kind of retail financing, they are extremely happy because this is the best community development activity we can do to Indian bottom of the pyramid customers. They start with buying one, they earn some money, every day they are able to run the family, then they put their children for education. So moped has been a great category. While the category may not significantly grow, but that category will be around 4%, and the set of customers, they get unique values from this category. That will be there, and we are definitely a responsible company. We will give them the technology of BS6 and make sure that they get the benefit of utility, whatever they are focusing on.
And are you confident that the price gap between moped and conventional economy segment motorcycle can be maintained in the BS6 transition?
We have seen that. We have seen all kinds of turbulence for the moped customer in the last for 6 months, and we have seen first from the competition side, from the insurance side also we have seen the competition. It has held on. I said 8.8 lakhs has grown to 9 lakhs, 2.3% growth.
And this is with 90% of the mopeds is electric, which is already 4,500 more expensive than a conventional moped. Is that understanding right?
Here we have to look at the price value equation, and there are a set of customers who love it.
And
I would like to only summarize that we are expecting next year overall for TVS Motor as a good year. Okay, domestic market, while there may be challenges in Q1, we will do better than the industry. Q2, Q3 we are seeing positive growth along the season. And as an industry, we have requested for GST to come down from 28 to 18, which is the kind of GST rates this two-wheeler should be given. So we are expecting that will happen. With all that, you will see the BS6 transition to be positive. Overall, as a year, we will see something good because with normal monsoon, you will see a reasonably good growth, single-digit healthy growth in the industry. We will do much better than that with the kind of range what we have, starting from Apache to Ntorq to Jupiter to Radeon and the Star range. International market will see very healthy growth rate, and we will do much better than that. Three-wheel will continue to grow much faster than that. And we will definitely delight the customer with launches in the year 1920, and this will definitely help, coupled with our cost reduction and initiatives, we will grow on our EBITDA.
So that's the margin. You are looking at a full year margin expansion in FY20, despite all the headwinds.
Overall, we will grow. While I don't want to give any guidance, we have consistently delivered that in the last 5 years, and we will continue to do that. And this year, 7.7 has moved to 7.9, while the industry has seen decline in EBITDA margin. Thank you.
Thanks a lot, sir. Best of luck. Thank you.
Thank you very much. I now hand the conference over to Mr. Annamalai Jayaraj from B&K Securities for closing comments.
Thank you, everyone. On behalf of B&K Securities, we thank Mr. Radhakrishnan and Mr. Gopal Jackson for taking time out for the call. We thank TVS Motor for providing us the opportunity to hold the call. Have a good day.
Thank you. Thank you, everyone, for joining this call.
Thank you very much. On behalf